CIO of International Equities, David Herro, talk about, David, I guess the lingering impact of, I guess we're calling it the crisis of the last few weeks and what that means for U.S., international, and also, I guess, to some degree, this tech trade, which some argued met some resistance yesterday.
Well, first of all, I think you have to separate the term crisis from a bank crisis to a banking system crisis, especially when you look at the situation with European banks. It's a very different situation, given deposit base, given that they already mark to market their securities. So you don't have the same accounting system in Europe as you do in the United States. And as a result, that you have a much different situation in terms of financial stability. And when you add to this the fact that the banking system around the world since the global financial crisis has more than doubled or tripled the capital on their balance sheets. This is a very different story than 07 and 08, when banks were undercapitalized and the assets they had were rotten. Today, the banks are overcapitalized and the assets themselves are relatively solid. If you take, I would say, Europe's probably best bank, BNP Paribas, it sits at just over half book value. It just sold Bank of the West. It closed in January, sold it for $16 billion, sold it for 1 3/4 times book, and is able to use some of these proceeds to buy back their own bank stock at just over half book. So I think we have to separate crisis from certain banks are in crisis, but I don't believe the banking system itself is in crisis. And because of the rapid movement of news and events, these things get all ginned up.
Well, two questions then. What about the argument that the episode surrounding Credit Suisse allows, once again, U.S. banks to go into Europe and take market share there? And do we believe that the rolling crisis, some are beginning to spin out, and commercial real estate and REITs, for example, is a U.S. story, not a European story?
No, you are going to have certain sectors. There are certain sectors, of course, that are going to feel more stress. And I think you bring up commercial real estate, especially in the office sector, will be stressed. And I think it will be stressed in various places. There's certainly a global aspect to some of this. However, as I was getting at earlier, the banks are extremely well prepared for the stress and the challenges they face. In terms of Credit Suisse, as you know, we were investors in this company for a long time until recently, where luckily we sold out before the thing really blew up. But this was an instance where you had a complete inability to manage one of their 4 businesses, the investment bank, and unfortunately it dragged down the other 3 businesses within the bank, the private wealth management, the asset management, and the Swiss Universal Bank. Were unable to sustain themselves because of what was happening at the investment bank. And I would suspect that the U.S. investment banks will pick up some of that market share, but in some of those other businesses, especially the very lucrative wealth management business, I think that will be more divvied up amongst the Swiss and other banks who are really proficient at managing, private banking assets.